OPEC cuts its 2024 oil demand growth forecasts and mainly blames China for the downgrade. Welcome to Market Insight, I'm Ramzan Karamali. So weaker than expected data for the first half of the year after the world's second largest economy looks to have led to the oil cartel revising down its predictions. In its monthly report, it said world oil demand will rise by 2.11 million barrels per day in 2024. Down from growth of 2.25 million it expected just last month. OPEC also cut next year's growth estimate. So was its less optimistic outlook justified? Well, to help answer that and more, I'm joined by Reid I'Anson, commodity economist at Kpler. Reid, thanks so much for joining us. So what do you make of OPEC trimming its expectations for this year and next?
It pretty much aligns with our expectations for demand this year. We currently see total products demand growth at around 1.2 million barrels per day this year. And so we have been expecting OPEC to slowly start to adjust lower their demand expectations. And again, you mentioned China in there as the big driver of this downward revision. And again, we would agree with that assessment. Chinese demand across diesel especially looks pretty weak this year. And even across gasoline, after a strong start to the year, Chinese gasoline demand has really weakened considerably into Q2 and Q3.
Now, the IEA has its report out on Tuesday. What are you expecting to hear from them?
They're probably going to mimic the same kind of message, demand coming in weaker than expected. Again, we'll see if they revise down lower the number that they currently indicated, to start the year. But again, I think they're going to mirror this message that demand is coming in weaker than expected. Again, largely driven by the story in China right now.
And can you see any sort of recovery in China at all in the coming months, or do you think it's going to be a pretty dour 2024 in terms of Chinese demand?
Unfortunately, we don't see much of a recovery. I think diesel demand, as I mentioned earlier, is kind of the weak spot driven by, the continued contraction across the property market, even though we have seen a big drive for manufacturing and exports out of China. I would say keep an eye out, though. We do expect a bit of an uptick in stimulus to the Chinese consumer that could provide some support to gasoline. But again, I would say we are not overly optimistic at this point.
Now, oil prices had a pretty good week last week, despite all the volatility in the equity markets. They were up around 3%. So where do you see them going from now until the end of the year?
Yeah, it's interesting first to kind of back up and just think about what prices did last week. We saw, a large sell-off across the equity market, and yet Brent managed to maintain at that $76 per barrel level and has again, traded higher since then. And I think you really saw that effect of the geopolitical uncertainty in the Middle East helping to provide support for oil prices. And I think that this dynamic is going to continue to play out through the rest of this year. We actually see oil prices trending back towards the low 80s. And ending the year at $81 or $82 per barrel. So I think especially this geopolitical premium will provide support to oil prices through the end of the year.
Well, let's have a look at last week's volatility on the equity markets. It is summer, so can we see a repeat of those moves again in the next sort of 2 to 3 weeks?
So it's important. There were two key drivers of the volatility that we saw last week. First was the Bank of Japan raising interest rates 2 weeks ago. That started to put pressure on the yen carry trade. And then you had a weak U.S. non-farm payrolls report, which again just added more selling pressure into the mix. However, we would caution right now, especially when it comes to the U.S. economy. Yes, things have weakened from 2023, but we still see growth in the U.S. at 2% this year. That's in line with long-run trend. And so I think we could see a little bit more downside pressure on equities, I think. But weakness in other areas of the market is probably about finished for now.
Reid I'Anson from Kpler, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.